In today's video, we have one of the most successful uranium investors in the world, Rick Rule, joining us today to talk about uranium nuclear, how it fits in with the turbulence of the global financial system that we're seeing today. So if you enjoyed today's video, make sure you hit the like button on it. Give us a comment right there down below. Shout out to our sponsor, Vizsla Silver, one of our favorite silver and gold mining sponsors. So Rick, what's going on is uranium's supply and demand fundamentals still attractive in the face of mounting global debts and rising interest rates and fears of stock market crashes and liquidity events?
Yes. The winds are really in the sails of uranium. You're noticing that even anti-nuclear countries, like Germany, are delaying the shutdown of their nuclear fleet. Other countries like Japan, and you'll remember earlier interviews that we had where I said the pace of Japanese restarts was the most important dynamic in the uranium market. That's restarting. Fragility in the supply chain, evidenced as an example by the Russian sanctions, have let us know that in a current circumstance where we produce 130 million pounds of uranium a year and we consume 200 million pounds of uranium a year, the current supply is insufficient to meet current demand, and demand is growing very rapidly. So the winds are in the sails of uranium. It's odd to see uranium suddenly be a politically correct fuel. I never thought I would live long enough to see that happen. But there is mounting acknowledgement on the part of some of the green community that one solution for increasing the amount of supply of electricity available, particularly to poor people, without increasing carbon loadings in the world, is uranium. That being said, the smallest of the uranium stocks have responded too aggressively. If you go back over our interviews in the last 3 years, Jake, in the beginning, 3 years ago, I was practically calling your audience's brokers, trying to tell them to buy uranium stocks because they were stupidly cheap and nobody cared. 9 or 10 months ago, the narrative was very strong. And I said I was coming off my uranium stocks. But now we're in a circumstance where the very, very, very smallest, the micro cap uranium stocks, the guys who don't have uranium, but they're looking for it, are uniformly overpriced. So I think you need to be careful. I think that you need to confine your uranium stock purchases to fairly good quality companies. I'm not talking about all seniors, but I'm talking about some juniors that have pretty good reserves and resources that would be economic at this price. Specifically, what I'm saying to people who are new in the market now is establish a portfolio, perhaps 50% with the Sprott Physical Uranium Trust, which is to say with uranium itself. If you believe the price of something is going to go up, buy the something, not the derivative. The other, and this is very self-serving, would say to have the other 50% in the uranium stocks represented by the Sprott ETF, URNM. And then because there's so much liquidity in those two, that if you need liquidity, want liquidity, it's there on a daily basis. And then pay attention to individual stocks that you'd like to buy. Selling small amounts of both your physical uranium trust and your URNM to upgrade your portfolio. To, as an example, buy private placements in companies when they became available that were attractive. Find companies that have declined in price for one-off circumstances. Absolutely be in this market. Be in this market because in the 2 to 3 to 5 year time frame, you are on the side of history. But be in this market with more caution than you were going to use to be in the market 10 months ago. The easy money in the uranium microcaps has been made. It doesn't mean that we won't experience that rise again. And you can participate in the market beta by owning the Sprott Physical Uranium Trust by buying URNM. But a chosen portfolio now of 5 junior uranium names with $50 million market caps, at least in the near term, guarantees that you're compiling a portfolio of overpriced juniors.
there's a lot of fear of stock market crash, interest rates rising, liquidity events, recession, depression, particularly with uranium. How does it fare in an environment like that when we are in such a grave supply and demand deficit? And even in the face of a recession, as you say, that the lights still have to come on. So, how particularly does uranium fare in such a turbulent and uncertain environment with these rise of interest rates, fears of market crash, et cetera?
In fear markets, you have a flight to quality, and secondary or tertiary assets get punished. There is no asset class in the world as tertiary, as speculative as junior uranium stocks. In the flight to quality, you'll see everything sell off. You will see the Sprott Physical Uranium Trust come back first. Because, as you point out, even in a recession, people want the lights to come on. The value inherent in uranium will come out. You will see the bigger uranium producers, particularly Kazatomprom and Cameco, fare fairly well in the aftermath of a liquidity crisis. And you'll see the juniors get creamed. That's why you need to keep speculative bets, like a uranium equities index, in context. You need to use money that to you is speculative money, not money that you had set aside for a child's college education or for your house payment.
Now, for the price to rise, does this interest rates hike have to stop? We're right now seeing uranium price selling off from what was its high. Does Sprott have to officially get approved for their New York exchange listing, for their trust? I mean, what has to occur for the price to make its next ascent up?
In the long run, that is, in reality, nothing has to happen. We need to have global population growth, and we need not to have a global depression. Listen, Jake, there's 1.2 billion people on Earth who have no access to electricity. There's another 2 billion people on Earth who experience energy poverty. Those people want to live like you and I, and that takes electricity. And the only way to do that without burning a whole bunch more coal is nuclear. So the long term takes care of itself. In the very near term, there are lots more variables. They could have to do with market liquidity or the direction of equity markets being impacted by equities pricing. And the Sprott Physical Uranium Trust is important to the extent that the uranium narrative continues to be popular and money continues to go into the Sprott Physical Uranium Trust. The Sprott Physical Uranium Trust tightens up the spot market and forces the utilities to go into the term market, which produces underlying strength in the uranium market, but it also provides certainty of cash flow for the uranium companies. So, the message is mixed. In the long term, the market takes care of itself, absent a depression. It absolutely takes care of itself. We've seen the fragility of the supply chain. We've seen the fact that political winds favor now the pace of Japanese restarts. We've seen economies that were going to shut down uranium production say, oh, we made a mistake. And we've seen massive commitments to new builds. We have a circumstance right now where we're producing 125 million pounds a year. We're burning 200 million pounds a year. And consumption is increasing against the supply deficit. Meanwhile, a fair bit of the surplus inventory, which is to say the spot supplies, aren't in the market anymore. I joke that the spot supply is now the Sprott supply. And to the extent that we tighten up the spot market, the utilities know that the spot market inventory isn't available to them. And they're going to have to become more aggressive on their purchases of uranium, both in terms of quantity and in terms of price.
Understood. I know you got to go. So 2 rapid fire questions. 1, what inning of the uranium bull market are we in?
6, I would say. Yeah.
Last question is, what is your expectation for Sprott Trust to be listed?
I can only hope. My belief is that we will be listed on the New York Stock Exchange. The difficulty is this is a brand new product. This is a product that the exchange doesn't have any experience with. Our former physical trust products were all redeemable, meaning if somebody held enough, they could redeem the units, they could get physical inventory. For fairly obvious reasons, we don't want to ship drums of yellow cake to somebody to store in their basement. And so this product is a product that the New York Stock Exchange and the SEC haven't had the ability to review yet. I'm told that we're in very constructive discussions with them, that the questions that they're asking are reasonable. But my suspicion is it will be at least in the third quarter before we're successful in obtaining the listing. I also need to say, Jake, that if you had told me that we could raise a couple $2 billion merely being listed in Canada rather than being listed on the New York Stock Exchange, I would have said that you were smoking a formerly illegal substance. But the truth is that the world is becoming much more internationalized, and we were able to raise a really amazing amount of money listed on Toronto. It is true, however, I think that the broader distribution that we would enjoy in the New York Stock Exchange, combined with the at-the-market financing, will allow the Sprott Physical Uranium Trust to grow much more rapidly if it's listed on the New York Stock Exchange, which I believe will occur.
Okay, well, I'll be sure to hold on to my pants until that happens. So we know you got to go. For everyone listening, hit the like button on this video in the description. Rick will rank your natural resource portfolio for free. And you can also leave in the comments private placements, and Rick can let you know about that. Rick, you want to tie us up?
I think that's it. I've enjoyed the conversation. Certainly, I'm happy to rank natural resource portfolios. Go to ruleinvestmentmedia.com. I'll rank your natural resource stocks 1 to 10. Please no pot stocks. Please no tech stocks. If you care about private placements or an accredited, write placements in the comment line. I'll send you details on the private placements that I do. Not a solicitation because I'm not a broker. I don't get paid. I'm doing it for laughs. If you are unhappy with your current banking relationships, in my retiring years, I've decided to start a bank. I've done that before. If you care about being a depositor or a borrower from a real bank, not a fake bank, write bank in the comment section. I'll send you information about the bank once we get our charter.
Okay, thanks, Rick. And for everyone listening, give us a like, comment down below for the good old-fashioned YouTube algorithm if you enjoyed this one, and we will see you next time.